YouTube. Welcome back to the Investing on a 9 to 5 YouTube channel. Happy Sunday out there to you guys. Hope you guys had a good weekend. Getting ready here for the week. Please hit the like and subscribe to the channel if you haven't done yet. If you're new here, welcome, where we go over any growth stocks, any dividend stocks that's on my radar and stuff that I've been adding to the portfolio. As the video is titled here, please do not miss out on any SCHD and why SCHD should be in your portfolio, and give you guys an update on what the ETF has or will be doing here on Thursday on a 3-to-1 stock split. So if you're looking to supercharge your investment strategy, you've come to the right place. Like I said, we're going to take a deep dive into an exciting dividend ETF, SCHD, and the stock split that it has coming up this week. If you don't own it, this video in hopes show you why you should own the stock in your portfolio. So let's go ahead and take a deep dive. So as you guys see, SCHD closed up here at 84.65 on Friday here as of close. If you guys don't know what SCHD is and what they do, they is a U.S. Dividend equity through Schwab. They track the Dow Jones 100, basically the top 100 stocks in the Dow Jones, which specifically tracks the high dividend yielding U.S. stocks only. They pay a history of dividends. It's very, very popular in the dividend and income community amongst investors, as well as good capital appreciation. So as you guys can see, the last 5 years, it has done 86%. The last 3 years, 25% clip. The last year, up 26%. Year to date, 14%. In the last month, it is up 2%. As you guys can see in my family portfolio, not just mine, a couple others portfolios that I do manage as well. We have a total of 225 shares in SCHD and a value of right now at $19,000. And we got a capital gains of $2,000 right now in the family portfolio is what I call it. And it's about made gains of 12%, which is not bad. I've consistently been buying a lot of it. In the last year, last 2 years, I've been, accumulating shares, including when it was in the $69 range here, as you guys can see, where it was just trending sideways here in the market. And now it's starting to make some trajectory up to, basically all-time highs. And now SCHD is now doing a 3-to-1 stock split coming up here on this Thursday, which is exciting. And I'll explain that to you guys later in the video. As I mentioned before, SCHD has a history of paying strong and a growing dividend. As you guys can see, since 2011, it has increased this dividend from all the way up from 12 cents all the way up to now $2.66 cents per share as of last year. And it's going to continue to do that, leading all the way up to the end of this year. So it's good safety there, good, as I said, good income. And we'll go and break down what's underneath the hood. So what's in this fund? You got financials, you got healthcare, consumer defensive, energy, industrials, consumer, silical, technology, communication service, basic materials, and utilities. So as you guys can see, it's pretty heavily weighted on the financials, healthcare, consumer defensive, and energy stocks. As you guys can see, it takes up about a good, 12, 13, that's about 26. And then you got about 40% of it is what's in these four sectors here, or which really good because it's not heavily tech rated, so therefore it's not really competing with the S&P 500. Kind of helps weather the portfolio when the market does take a downturn. As you guys know, technology is very heavily weighted in the market, so any downturns with tech, normally like the S&P 500 or anything tracking anything of that nature, would normally take a dive as well. But this ETF here has done very well over the time. It's held its ground, and I think it's not in your portfolio, it should be. So let's break down the top 10 holdings, which makes up 41% of the ETF. So you got your Home Depot, you got your Verizon, BlackRock, Bristol Myers, Chevron, Cisco Systems, Lockheed Martin, Pfizer, Abbey, and Texas Instruments. These are all great. Whether your portfolio is down, is still more so safety is, like I said, it brings a lot of value to the portfolio. And then also too, a lot of these stocks are pretty premium price. I know Home Depot's in the $300 mark. BlackRock's up there too. It's a couple $100. Chevron's around the 165 right now. Lockheed Martin's a 400, almost $500 stock right now. Abbey is a 180, I think, right now stock. Texas Instruments is pretty premium as well. So SCHD gives us as investors opportunities to not own the stock whole 100% outright, but gives us about a certain piece of the pie. So therefore, when the market, like I said, does take a downturn, you're not taking that full hit onto the portfolio if you were to own these stocks here outright own in your portfolio. And like I said, too, guys, when value is very, very key when you're building a long-term portfolio. And these companies here, they provide a very good market cap, long history of dividend payments, cash flow to debt, return on equity, things of that nature. And that's what Schwab, the team over there, that's what they really metric themselves and value themselves on when they're adding these stocks to the ETF, essentially. So they had to look at a market cap of at least 500 million, have to have at least 10 years of dividend payments, which is huge. Eligible components based off of these four criteria is two: cash flow to debt, return on equity, dividend yields, and a 5-year dividend growth rate. These are all key things here to help building that long-term income that you'll be looking to get when you're 10, 20 years down the line. Next slide here on the portfolio, or essentially on the video here. I have a little snippet from a follower that I follow here, Dividend Millennial. He broke it down into a really good perspective, and saying that dividend growth can be more important than the dividend yields, such as stocks that pay a high yield, such as like a company like ET that pays an 8 to 9% yield, or anything above that. Very, very high yield means very, very high risk at the same time too. So you kind of have to have something in the portfolio to balance that out. But over the last 10 years, the ETF has averaged over 11% dividend growth. That means that your 3.4 dividend yield that it is today could be yielding 10%. It could be a high yielding stock in the next 10 years or so, right? So if you're looking for retirement income, dividend growth is a life hack. Once again, guys, this can help your future self down the line, especially if you're looking to retire here in the next 10, 20 or so on years, or you want to hold this in your portfolio down the line. SCHD can provide that income if you were to get in now and you're looking to have that growth come in down the line. Because if you think about it, will you get 11% raise over your job in the next 10 years? More than likely not. If you do, that's awesome. But your average day 9 to 5 worker can't go and get that. And that's why the stock market, gives you that best value as far as growing your income slowly as you accumulate more shares, and the ETFs or the stocks continue to raise their dividends and so on. And that's why SCHD has those metrics. So therefore, when you purchase this ETF, your money is not just growing capital wise, but you're also growing that income as well. So when you get to retirement, therefore you're not having to sell shares to create growth. Therefore, that money is there paying you at a solid interest. And as I mentioned at the intro of the video, effective on October 10th, the ETF will go under a 3-to-1 share stock split. That, if you're a shareholder before that date. So that means that for every share that you own of ETF or SCHD ETF, you will get 3 shares. And if you see here, we have 225 shares in the portfolio. Myself, I own 46 shares of that. But adding in everything that we own in the family portfolio, 225 shares times that by 3, we're going to end up with 675 shares on October 10th after the stock split, which will be huge. It's not going to raise your capital gains. It's not going to increase your dividend income. It's just going to give you more shares. And essentially, only thing you got to do is just take the stock price where it's at now and divide that by 3. It's going to take it back down to $29.91, around this price range. Don't quote me on that, but it should take us around that price range. Now, looking back from January 31st, 2013 until now, October 6th of 2024, it has taken about 11 and a half years or so for it to reach to this price. My question to you is, how long do you think it's going to take for it to get back to where it's at now in the next 10, 20 years? It's going to do more likely the same thing. It's going to have the same companies. They're going to shuffle it out and put better companies in. If they see a company that is not meeting the metrics, they're going to put another company in that's meeting those metrics, so we can continue to get back up to the $84 range and so on. And who knows, maybe the next time it gets back up to $84, $85, it may not split again. Instead, we can continue to get those capital gains and so on. So this would be an opportunity if you're looking to get into this powerful dividend ETF, SCHD, to help boost not only your income here in the future, but also get some capital gains in it when it resets itself and makes its way back up to higher gains in the $80 mark here, probably in the next 10, 15 years. Don't quote me on that, but I'm more likely going to be very excited to do that because it's going to give us an opportunity to buy this at a cheaper price. That's the only reason why they're doing it. And then also, too, it's going to attract new investors to come in and purchase it as well, and which is going to help drive up the price on SCHD. And guys, that is all that I had for you here on this quick video here on a Sunday, just going over SCHD and the 3-to-1 stock split that's coming up here on the 10th, which is Thursday. I thank you guys for being here. Don't forget to like and subscribe to the channel if you guys haven't, and we'll keep the videos pumping out for you here as quickly as possible as I can. And I hope you guys have a great start to your week. I'm out.